Bitcoin has done it again. On May 10, 2025, the world's leading cryptocurrency smashed through the psychological barrier of $100,000, marking a significant milestone in its journey. This surge represents a remarkable turnaround from the volatile period experienced in the past year. It signals renewed investor confidence and solidifies Bitcoin's position as a dominant force in the financial world. The digital asset started the day strong, with an opening price already above $98,000. As buying pressure intensified, Bitcoin continued its upward trajectory, eventually breaking through the $100,000 mark in the early afternoon trading session. This is a critical threshold that many analysts have been watching closely. This price movement is not just about numbers, it's about perception. It reinforces the narrative of Bitcoin as a store of value and a hedge against inflation, especially in times of global uncertainty. The percentage gains alone are impressive, but the speed at which Bitcoin achieved this milestone is even more remarkable. The $100,000 mark for Bitcoin is more than just a round number. It's a psychological watershed moment. This level has long been touted as a key target by analysts and investors, and its breach carries significant weight in the minds of market participants. Surpassing this threshold instills a sense of legitimacy and reinforces the belief in Bitcoin's potential for further growth. Breaking through such a significant price barrier often triggers a wave of new investors drawn in by the fear of missing out, or FOMO. This fresh influx of capital can further propel the price upwards, creating a self-fulfilling prophecy of sorts. The psychological impact extends beyond the crypto space. Traditional financial institutions, once skeptical, are now taking Bitcoin more seriously. The mainstream media is abuzz with news of this latest milestone, further solidifying Bitcoin's presence in the public consciousness. From a technical standpoint, Bitcoin's recent price action paints a bullish picture. The Relative Strength Index, or RSI, a momentum oscillator used to identify overbought or oversold conditions, currently sits above 70. This suggests that Bitcoin is in overbought territory, which could signal a potential short-term pullback. However, in a strong bull market, the RSI can remain elevated for extended periods. Support levels, which indicate price points where buying pressure is expected to outweigh selling pressure, have also shifted upwards. The previous resistance level of $100,000 is now expected to act as a strong support zone. This means that if the price were to retrace, buyers are likely to step in around this level, preventing a significant decline. However, it's important to note that technical analysis is not an exact science. While these indicators provide valuable insights, they should not be interpreted in isolation. Market sentiment, macroeconomic factors, and regulatory developments can all influence Bitcoin's price trajectory. Bitcoin's recent performance has once again highlighted its potential for outsized returns. However, it's crucial to assess these returns in the context of risk. The Sharpe ratio, a measure of risk-adjusted return, provides a useful framework for comparison. Bitcoin, despite its volatility, boasts a higher Sharpe ratio than many traditional assets, including stocks and bonds. This suggests that Bitcoin offers a more attractive risk-reward profile, especially for investors with a long-term horizon. The ability to generate superior returns relative to the level of risk taken is a key reason why institutional investors are increasingly allocating to Bitcoin. It's important to remember that past performance is not indicative of future results. Bitcoin's price is influenced by a multitude of factors, many of which are difficult to predict. Therefore, it's crucial to approach Bitcoin investments with a clear understanding of the risks involved. Section 5. Navigating the macroeconomic landscape. Bitcoin's price surge is not occurring in a vacuum. The global macroeconomic backdrop has played a significant role in driving demand for the digital asset. Geopolitical tensions, rising inflation, and concerns about the stability of traditional financial systems have all contributed to Bitcoin's appeal as a safe haven asset. Central banks around the world continue to grapple with inflationary pressures, resorting to monetary easing measures that devalue fiat currencies. This has led investors to seek alternative stores of value, such as Bitcoin, which has a fixed supply and is immune to inflationary monetary policies. Furthermore, the increasing adoption of Bitcoin by institutions and corporations is lending legitimacy to the asset class. As more companies add Bitcoin to their balance sheets and payment networks integrate cryptocurrencies, the demand for Bitcoin is likely to continue growing. Section 6. Market sentiment. Bulls in control, but for how long? Market sentiment surrounding Bitcoin is currently overwhelmingly bullish. The recent price surge has ignited a wave of optimism, with many analysts predicting further gains in the coming months. Social media platforms are abuzz with positive sentiment, and the fear of missing out, or FOMO, is palpable among investors. However, it's important to remember that market sentiment can be fickle. Extreme bullishness can often be a precursor to a market correction. When prices rise too quickly, it creates a disconnect from underlying fundamentals, making the market vulnerable to a pullback. While the long-term outlook for Bitcoin remains positive, investors should brace themselves for potential short-term volatility. Periods of consolidation and correction are a natural part of any asset class's price discovery process. Section 7. Altcoins on the rise: a threat or an opportunity. Bitcoin's dominance in the cryptocurrency market has diminished in recent years, as alternative cryptocurrencies or altcoins have gained traction. Ethereum, in particular, has emerged as a formidable competitor, driven by its smart contract functionality and the burgeoning decentralized finance, or DeFi ecosystem. While some view the rise of altcoins as a threat to Bitcoin, it can also be seen as a sign of a maturing market. The cryptocurrency space is no longer a one-horse race, and investors now have a wider range of options to choose from. The performance of altcoins is often correlated with Bitcoin's price movements, although the relationship can vary. During bull markets, altcoins tend to outperform Bitcoin, as investors seek higher risk, higher reward opportunities. However, during bear markets, altcoins typically suffer more significant losses than Bitcoin. Section 8. Navigating the Bitcoin rollercoaster: risks and considerations. Investing in Bitcoin is not for the faint of heart. The cryptocurrency is notorious for its volatility, and prices can swing dramatically in short periods. Investors should be prepared for a bumpy ride and only invest what they can afford to lose. It's essential to have a long-term investment horizon and not to panic sell during market downturns. Bitcoin has experienced several boom and bust cycles throughout its history, and those who have held firm through the volatility have been rewarded. Before investing in Bitcoin, it's crucial to conduct thorough research, understand the technology, and assess your risk tolerance. Consider diversifying your portfolio and not putting all your eggs in one basket. Remember, the key to successful Bitcoin investing is to stay informed, manage your risk, and ride out the volatility. Section 9. The road ahead: continued growth or a market correction. Bitcoin's recent surge past $100,000 is a testament to its resilience and potential. The combination of strong fundamentals, favorable macroeconomic conditions, and growing institutional adoption bodes well for the cryptocurrency's future. However, investors should remain cautious and not get carried away by the hype. The market is currently in overbought territory, and a correction is not out of the question. Short-term volatility is to be expected, and investors should be prepared for potential price swings. However, long-term investors who believe in Bitcoin's potential as a store of value and a hedge against inflation may view any pullbacks as buying opportunities. Ultimately, Bitcoin's price will be determined by the interplay of supply and demand. As long as demand continues to outstrip supply, the price is likely to trend upwards. However, investors should stay informed about market developments, assess their risk tolerance, and be prepared for the possibility of short-term volatility along the way.